introduce Jeff McCann. Hi, Jeff. Jeff is the founder and CEO of Apollo Insurance, and he's going to give us a chat this afternoon discussion on revolutionizing the insurance industry. Jeff, let me hand it off to you. Welcome.
Thanks so much, Glenn. It's great to be here. Appreciate the opportunity to chat a little bit about the insurance landscape. Apollo is a Vancouver, Canada-based online insurance company. We've raised about $16 million to date. We're backed by a variety of investors, including a couple insurance companies, Liberty Mutual as one of them that you might recognize the name of. So let's talk a little bit about what we're doing here. Glenn, can you just confirm you can see my screen here? See the slides? Fantastic.
Yeah, I see it.
So Apollo is Canada's leading online insurance company. InsurTech is sort of a newer buzzword as a subset of the fintech space. We launched the business in April of 2019, and we now have built the largest selection of online insurance in Canada. The premise is pretty simple. It never made sense for me that you weren't able to buy insurance immediately online when you can get almost everything else. And so when you buy insurance from Apollo, it takes less than 5 minutes from the beginning of a bit of a chat type interaction, paying for that policy and having that emailed to you right there in real time. Our go-to-market focus is underserved segments of small business and personal insurance. And these are customers that are largely ignored by the existing market. I think there's a lot of movement in the small business space. We're seeing it in banking. We're seeing it in other categories where, small businesses are really underserved, and there's a lot of opportunity as a result to do a better job than the incumbent players. And insurance today is really a paper-based, friction-filled process. It's not something that's really exciting. No one gets up in the morning and said, hey, today's the day I get to buy my insurance. If you're an entrepreneur, you have a million things going on, and some investor says, hey, to be on your board, you need this type of insurance. Your lease needs it, and you're like trying to move in, and it's sort of the last thing that you really want to do. It takes up to 6 weeks, all this paperwork back and forth in a lot of cases. And oftentimes it's very opaque. It's not something that we know much about. You don't learn a lot about insurance. It's kind of a dirty word at dinner parties. It's just not an exciting topic. And so it's something that a lot of people don't really go into, despite the fact that it's such a large industry. And we know, and we've heard from some of the other entrepreneurs in this session, that obviously people expect, mobile first. People expect things to be 24 hours. We expect the fact that, if we can get a pair of pants from the other side of the planet delivered to our front door, how come I can't get a promise on a piece of paper sent to me, which is really all an insurance policy is. And one of the interesting things about insurance is that it's necessary. I see a lot of entrepreneurs building great businesses in consumer products or in new segments where people have a choice. They don't need that product at all. It might be a nice to have. Whereas insurance is something that every single person, if you need a mortgage, you need insurance. If you want to rent an apartment, oftentimes you need insurance for your landlord. You'll need it for your lease. If you have investors, you're going to need director's insurance. And so it's something that's a really important product, and it really underpins a lot of the financial services industry, because people won't lend against things unless there's insurance on that asset. And obviously, and we talked about this a little bit so far in the session, where the pandemic has really accelerated a lot of digital trends. You're seeing that in grocery and other more obvious segments, but it's really challenging the incumbents to move. And it's very, very hard, particularly for risk-averse, very, very large organizations like you have in the insurance industry, to make this transition away from kind of mainframe servers, away from their traditional businesses. There's also a culture shift that is really, really challenging. Insurance is the oldest average age of all of the financial services. And so you're not necessarily seeing a cultural adoption within the organizations, in addition to it just being challenging and difficult for large organizations to make, a digital move and to sort of reinvent their businesses. And as a result of insurance being mandatory, it's a massive market. So we estimate about 40 million transactions in Canada are less than $10,000, really ripe for technology in this kind of small, and not even micro, but smaller transactional space. There's about 1.2 million SMEs in Canada and about 30 million in the US. And you also know in the personal line space, every homeowner or renter needs insurance. Even if you don't have it, a lot of leases now include it. the more and more that REITs buy up properties and are buying up assets, they're making insurance more and more mandatory, and they're enforcing it a lot better. And also coming out of the pandemic, there's this renaissance of entrepreneurship. And that's why, as we're digitizing these products, we're seeing this record number of small business starts. There's going to be tons and tons of government stimulus to support entrepreneurship, to support small businesses. And so there's these tailwinds in the SMB space that we're sort of timed up for as we sell insurance to these new customers. The other thing that's interesting is that insurance prices are going up. As COVID was one of the largest insurance claims in history, what you're seeing is tons and tons of inflationary pressure. You're seeing different capital from the insurance space exit the North American market because they can deploy that capital somewhere else. And so we're also seeing things like lumber prices going way up. And if lumber is more expensive, guess what? It costs you more money to insure the house that you have to rebuild, because it just costs more to rebuild that house at the end of the day. Canadians spend about 66 billion on property and casualty insurance products every single year. The US market is about 10 times that, about 600 billion. And insurance, although it's, again, not exciting, it's not kind of a sexy space, it's one of the few trillion-dollar global businesses. It rounds out about $5 trillion a year people spend on insurance. And an interesting stat, and this is actually just from earlier this year, is 1.3% of Canadian insurance is sold online. So when you look at, what we've seen in other areas of fintech, like online and mobile banking, what you see in Netflix going from, mailing DVDs and even VCRs all the way back before that, it's at a Blockbuster video store. Insurance is very much at the very beginning of this life cycle. And so it's one of the last industries that's been touched by the innovation that we've seen in a lot of other areas, a lot of other segments. And so our solution is actually kind of obvious. And people often say, our investors or otherwise, like, I'm surprised no one's really done this. We're seeing a little bit of movement in this space with names like Lemonade going public with a lot of fanfare. Next Insurance has raised a bunch of money. There's a few new players, but for the most part, insurance is still done in this very old-fashioned way. And so for Apollo, by using technology, we create a much better experience for insurance brokers who sell products for us, and also for the end customer who can buy directly from us. You apply online, you get a quote right there in real time. There's no human intervention, and you don't have to talk to someone if you don't want to, but we have people for that advice and counsel. And then we automate the renewal, so year after year, it keeps moving. And of course, you can imagine we collect so much data in the application forms and about these customers that we collect an incredible amount of data that we can apply machine learning and AI to. And similar, if you look at the last conversation and the last presentation, really interesting insights about how to collect data in other segments. And as a digital player, we're looking at saying, well, how do we integrate with partners like that to be able to collect data and underwrite in a more different way? If you're a human underwriter, you can only look at, so many data points to decide what should the price be for this business you're going to insure. But if you're a digital underwriter, you should be able to look at a million different data points and then make a much better decision on how you apply risk transfer and insurance to that asset. And insurance is a really interesting e-commerce product because we don't have to ship anything. And so the number one, the product renews at about 81%. There's no shipping, there's no logistics. This is sort of the now famous Ever Given picture where you look at global supply chains being totally upended because of COVID, because of the Suez Canal. You're seeing a variety of these businesses that are e-commerce driven that are disrupted. And so for us, we really have an unlimited product. There's no manufacturing. And so it's a really cool e-commerce product to be able to sell because we don't have to worry about those supply chain logistics like you would see in other segments. So when we look at how we're going to build product or how we choose product, we either start with one, what has a huge TAM, right? And so you look at professionals, there's a huge number of accountants, bookkeepers, consultants out there. So we say, great, let's build a product for them. You look at renters, there's an incredible number of renters and about only 50% buy insurance right now. So we're seeing that as a growth segment. So that's one of our strategies, is going to big TAM markets. The second is we look at trends in other markets and we say, well, can we develop and launch insurance products into those trends? So you see on the front page of the news, record number of pet adoptions during COVID. We're saying, well, how can we launch pet insurance into that market? Record number of boat sales. And so everyone's staying domestic, everyone's staying local, borders are closed, people aren't traveling internationally, everyone's out buying a boat. And so as we see these record number of boat sales, we're saying, well, can we launch an insurance product into that segment? And then, of course, the third one is there's always cross-sell and upsell opportunities. And people talk about that in the traditional insurance space, but using data, we can really pinpoint the ideal time to present a product into a market and to be able to offer that cross-sell upsell. So as an example, on our renter's insurance product, we asked if you have a pet. So now we have that data point. If you schedule a wedding ring or an engagement ring onto your policy, which is one of the most common times that people actually get insurance for the first time, because now they've got this big ring. So then we know, okay, well, how long till you get married? We have a wedding event insurance policy that most venues, if you're getting married at a golf course or a hotel, they want to see that. So we know, okay, your wedding date, we know where you got married. We can really predict how long till children, how long till you buy a house, and then using more and more sophisticated data, present those additional products at the right time to that customer. That's really not something you can do in a paper-based world. So our go-to-market strategy in the B2C side is really partnering with existing networks, existing clusters. So rather than spending a ton of money kind of lighting it on fire in pay-per-click, which is very, very expensive, especially in insurance, which is one of the most expensive keywords that's possible. We say, well, how do we go partner with other tech companies, potentially even other people who are participating in this session today, and that already have collections of users. So if you're a small business accounting software platform, if you're a platform that helps SMBs with maybe point of sale, maybe it's other SMB or sort of clusters in terms of your customer base, we can actually very quickly work with you in a partnership to be able to cross-sell insurance to your members. So we work with a variety of other tech companies in these kind of key segments. So prop tech, property management companies, we're able to partner with them and help present renters insurance on move-in as part of the sort of app or as part of the move-in workflow. Other personal lines, apps, or networks, there's lots of aggregator websites. You know, we talk about the housing boom. I think, Glenn, you made some comments on that, looking at that as a segment that's just exploding. Well, mortgage tech is a huge segment, and we're partnering with different mortgage tech companies to say, well, how do we present in home insurance at the time? We already know all the data about the place because of the mortgage app. How do we present home insurance as part of that workflow? And so, you know, a few examples of some of our partners you might recognize or not. You know, some of these are very large REITs, some of these are other tech companies, and it just kind of gives a cross section. You know, University of Calgary, that's in Alberta, Canada. If you move into dorms there, you get your renter's insurance from the school, but it's actually us powering the whole transaction in the background. So what this does is it creates a very low cost of acquisition for us because we partner with these other apps to present insurance as an offering. That's it for sort of how Apollo works, and you know, a little bit about the context of what's happening in the insurance market and how we're going into that market to solve those particular problems.
Thank you, Jeff. Very, very, very interesting. I just got my my homeowner's renewal came in, and I was laughing because I always forget, why is it so high, and the ring is on there. From all those years ago, we're still insuring that.
You're probably still renewing with the same person that you bought from at the beginning, and year after year they send it to you and you pay the bill, and it's really passive, almost SaaS looking revenue for those businesses providing that, because you're just going to keep renewing year after year until there's an opportunity to sort of make a change.
Well, you know, it's interesting because you talked about paper, right? The first envelope came on Saturday, and it's 12 pages. Right. And it warns you that more is coming, right? This isn't the policy. There'll be another one coming. So it'll just keep accumulating. I was curious on the Canadian side, from you know, here, you know, you have the superintendent of insurance. Did you have to work through each of the provinces as you were developing the product, or was it a blanket kind of approval? How did it work?
So on the licensing side, it's done provincially, much like it is in the US market. And so we're licensed province by province. That's the way it's set up. And then when it comes to developing the products, we really work with either reinsurance companies, some domestic Canadian insurance companies, Lloyd's of London, who's a huge writer. And so they're a partner of ours, and we distribute lots of Lloyd's product as well. And so it really depends on how different businesses are set up and the jurisdictions that we can sell on behalf of. But it's similar in a lot of ways. Where each province, it's basically its own, you know, registered insurance environment, much like each state is south of the border.
I see. Okay. Well, you know, it's also, I found fascinating, and my daughter's is in the industry. The fact and she does underwriting. The fact that you put machine learning to it and AI, that's an amazing tool, because then you're getting so much more business intelligence. And again, for these online quotes, I assume all that's embedded into the software as you go into the system, right?
Exactly. And so all the quoting is real time. It doesn't have to go off to an underwriter. And so we're really actually replacing the underwriter for these sort of commoditized smaller products by building out what's really algorithmic underwriting through our technology and through our platform to say, here's your price. If you want to go ahead with this, you can confirm that and buy that without any intervention, no double checking. And then it's going to issue you an insurance policy right from the technology.
That's terrific. And you mentioned the college market. That's kind of, fish in the barrel, right? You've got tens of thousands of students showing up in dorms, and the people lose sight of it, right? That it is content. It should be protected. The obviously the building has to be protected as well, but it is your stuff in the room, right? So it kind of makes sense that they otherwise require it. And then when you look at certainly the public markets in the world of REITs, that sounds like a logical kind of partner and hook up on your side as well. Looking at the different types of REITs and real estate that they get involved in, and the needs there as well.
And there's a lot of REITs that are actually in the student market, and there's crossover. But largely, if you're the owner of that property, it's a liability policy you want every renter to have, right? And so whether it's students who just leave the bathtub on that, floods the floor below them, or it's something that's a little bit more rowdy, whatever it becomes, you want to make sure, hey, you can claim against that policy. Because you go after some student, like, they're not going to be able to pay for all the damage. And so you want to make sure that they have insurance. And so that's where you're seeing a lot more compliance with it, whether it's student housing or just other rental buildings, where making sure that someone has that coverage is good for the owner of the building, the owner of the asset.
Did you have to trademark InsurTech?
No, that's one of those buzzwords that's come out to the market, and it's sort of as a subset of the whole fintech space. Everything now is something tech, and it's
absolutely no, terrific. Well, listen, thanks for joining us. Really, really fascinating presentation, cutting edge, and we wish you the best of luck going forward. Again, your information's in the speaker tabs if anybody wanted to reach out, and we appreciate you joining today. All right, Jeff.
Thanks so much for having me. Feel free to reach out, and all the best. Thanks so much, Glenn.